Hey guys, welcome back to the channel. It's me, Adam, and you're watching Unlimited Options Investing. We've got to talk about it. Facebook, Meta platform stock, crashing after hours, down 20%. Now sitting in late 2020, early 2021 prices at around $250 a share. A far cry from back in September of 2021 when it was $380 a share, where we then got a correction with the broader markets, and then Facebook kept getting bad news after bad news, leading to where we are today in a disappointing earnings report, missing on a lot of numbers. We're also going to be taking a look at Spotify and Qualcomm stock, which also reported after the hours. If this is your first time on the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, ETFs, and we're investing for the long term. As always, smash that like button. Meta stock tumbles on weak earnings and a disappointing outlook. Shares of Meta platforms were tumbling in extended trading Wednesday after the Facebook parent reported weaker than expected fourth quarter results. The company's first quarter outlook was well below expectations. Meta reported net income of $10.29 billion or $3.67 a share. Total revenue rose 20% year over year to $33.67 billion. So total revenue going up 20% year over year is good. Analysts polled by FactSet had forecast earnings of $3.85 a share and revenue of $33.4 billion. So we had a small beat on the top line with $33.67 billion versus the estimated $33.4 billion. However, on the bottom line, we missed pretty badly with $3.67 a share versus the estimated $3.85 a share. The company said it now expects first quarter revenue to be in the range of $27 billion to $29 billion, representing growth of 3% to 11%, which is not very high, which is not great. We want to see it in double digits. Wall Street has been expecting first quarter revenue of $30.2 billion. Wall Street had been expecting first quarter revenue of $30.2 billion, and seeing right now how they're expecting the low end of their estimates 10% lower than what was previously expected. Meta cited headwinds, including privacy changes to Apple's iOS mobile software, which has made tracking users more difficult. So that's Barron's. What does CNBC have to say? Facebook earnings came in below expectations for the fourth quarter, and the company said numerous challenges are ahead in the first quarter. Inflation, supply chain disruptions at advertisers, and users shifting to products that monetize at lower rates are among the key issues the company faces. And again, that big miss on revenue forecast. Facebook also missed estimates with user numbers. Daily active users, 1.93 billion versus the expected 1.95 billion, and monthly active users at 2.91 billion versus the expected 2.95 billion. And again, with the revenue forecast being between 3 to 11% year over year, whereas we were expecting something along the lines of 15%. There's also a shift to products that don't generate as much revenue as its core newsfeed. For example, people are spending more time on its Reels videos. On the impression side, we expect continued headwinds from both increased competition for people's time and a shift of engagement within our apps toward video services like Reels, which monetize at lower rates than Feed and Stories, Facebook said. And look at this after hours, we are down 21.76%, currently at $252. And don't get me wrong, this doesn't necessarily have to be the bottom whatsoever. I mean, it could be, by all means, it could have been, but it still has potential to fall even further. Taking a look at the candlestick charts, so we peaked back in early September. After today's close, we were between the 20 and the 50 EMA, back to levels of August of 2020. And for all intents and purposes, this blue trend line is nowhere near intact anymore. It held up over the last couple of weeks during the sell-off, but this earnings has really killed it. And we're seeing opportunities like this all over the market, large caps, mid caps, small caps. Don't get me wrong, some names are doing much better than others, but there are a lot of opportunities out there. Okay, next up, Qualcomm beats expectations for revenue and earnings, sales up 30%. Qualcomm's chip business grew 35%, driven by handset chip sales. We had a big beat in EPS at $3.23 versus the expected $3.01, up 49% year over year. And revenue also beating at $10.7 billion adjusted versus the $10.42 billion expected, up 30% year over year. And despite the double beat, we still sold off $188 to $172 1 point after hours, but then recovering to where we are now at about $183 per share. Qualcomm, a $211 billion company, yielding a dividend of 1.45% per year. And not to mention, Meta Platforms is way off its 52-week high of a $1 trillion valuation. I'm not sure exactly how much it's going to open at tomorrow, but I'm going to guess somewhere around 800 billion, maybe even lower. And Spotify plunges on middling user growth projections. Shares of Spotify plunged in after-hours trading Wednesday after the streamer reported fourth quarter earnings. The company beat on the top and bottom line. The streaming company posted 406 million monthly active users in the quarter, up from 381 million. Here are the key numbers. Loss per share at 0.21 euros versus the expected 0.43 euros. So definitely a nice beat there. And revenue at 2.69 billion euros versus the expected 2.65 billion euros. Decent numbers, however, it sold off, and perhaps Spotify and Qualcomm both fell because of the numbers from Facebook, and a few other big names in the NASDAQ also fell immediately, like Microsoft. Amazon is down 3.36%. The NASDAQ as a whole is down 1.81% after hours. So decent numbers out of Spotify, although it's down 11%. So do you buy, do you hold, do you sell? What do you do with Meta Platforms? And honestly, it just depends on your plan, your own circumstances, having the self-discipline to stay on that plan and being consistent. But hey, let me know in the comments below, what do you think of Meta Platforms? Are you touching it? Are you waiting for lower prices? Do you think it's going to rebound? Where's the bottom? Let me know your thoughts in the comments below. As always, like, subscribe, and I'll see you in the next video.